Creating an investment strategy. You now have some background knowledge of the three main investment options and an overview of bonds and how each can provide you with a potential financial return on investment. Next, we're going to use that knowledge to develop an understanding of how these potential options for investment can be used to inform your own investment strategy. Most businesses will have a strategic plan. A strategy is a plan of action designed to achieve a particular goal or set of goals. To create one, you should identify your goals or objectives, analyze the current situation, determine the best course of action, and then execute the plan. So to set your strategy for investment, you can initially reflect on what you want to achieve from your investments. This will help you derive your investment goal. It could be to achieve a small monthly return on the investment, to have fun, to make slow but long-term gains, or to make enough money to buy something special. Ultimately, it's the reason why you're investing and your ultimate outcome. Once you know this, you can start to think about the route to achieve this goal, and this is known as your investment strategy. Now, everyone's strategy or way of reaching their goal is the same, but there are a few similar approaches to delivering your strategy. These general approaches include buying and holding, value holding, growth investing, and income investing. Buying and holding is all about long-term gains, buying stocks, bonds, or assets and holding them for a long period of time to make a gain. Typically, the hold can be for years or even decades in order to benefit from the long-term growth of the investment over time. Value investing, on the other hand, involves identifying stocks or other assets that are undervalued by the market. Once you find them, they are purchased at a low price in anticipation that their value will increase exponentially in the future. When you're happy with your return, or think the assets are at their height, you sell for a profit. The third investment strategy is all about growth. Growth investing involves identifying stocks or other assets that have the potential for significant growth in the future and investing in them with the goal of realizing large gains. This is slightly different from value investing as it is focused on a longer-term strategy, but has similar principles in the sense that the stock is usually a lower price and investment returns are in the hundreds or thousands of percent. Those that invested in Amazon when it came out as an initial price offering saw this strategy come to fruition. Finally, the last approach to strategizing your investment is income investing. This typically involves investing in assets that generate a regular income stream, such as bonds, dividend-paying stocks, or rental properties. It provides you with a regular, almost fixed income each month, quarter, or year. These types of investment usually have a lower yield but are safer as a strategy for the long and short term. Once you've determined your investment strategy, the next thing to consider as part of your overall approach is your risk tolerance. Any investment carries risk, and despite taking as much care as you can by researching and analyzing your options, you can't be responsible for things that are out of your control. So if there is anything that you need to remember or take away, it's that you should only ever invest what you're willing to lose. And if you can do this while also creating a strong and healthy portfolio, you will feel and be much more comfortable with your investment strategy and approach. In essence, due diligence is important and really key to taking a managed risk approach to your investments. Your willingness to take on risk, or some might say how aggressive or passive you want to be in your investing, is a question you need to ask yourself. So think about that now and ask yourself, what is your risk tolerance? Everyone's answer will be different and depends on factors such as your age, financial situation, and investment experience. It will change as you develop an understanding of the market you're investing in. So my advice is to take it steady and build your confidence and analyze your risk as you go. Once you have a clear understanding of your goals and risk tolerance, you'll need to choose your investments. And this is what we'll discuss in the next section. So if you want to explore more about creating a safe and measured investment portfolio, let's look at how you can balance and optimize your portfolio to achieve this now.